Hi, I'm Rhonda Schaffler, and today I'm speaking with Capital Group's Director of ETFs, Holly Framsted, about active ETFs and how they become a resilient and vital part of a portfolio, especially with all this volatility we've seen as of late. Holly, it's great to see you. Let's get right to that volatility issue. Given what's been happening with the markets, how do the ETFs fit into an advisor's strategy in this kind of climate?
Thank you so much, Rhonda. And you are right. Markets have been incredibly volatile, and it feels like every day there's a whole new reason for volatility. So I don't think that this is a trend that is going to change anytime soon. But I'm a glasses half full kind of person. So when I think about market volatility right now in particular, I see really two key opportunities for investors. First, as we have seen market declines, that provides an opportunity potentially for some tax loss harvesting and to evaluate changes in a portfolio that might not have been possible for financial advisors and for the taxable portions of their clients' money, just a year or two ago. So we're in a very unique environment where changes can be made. And we're in an environment where I believe active management is more important than ever. Making sure that you have a manager who can really weather the volatility that we're seeing, that can make shifts at the portfolio level that benefit clients and investors over the long term is critical. And so in an environment where financial advisors can make shifts that they might not have been able to make before and can reevaluate the use of active management, I think volatility is really providing a whole lot of opportunity at the core of a client's portfolio.
How prepared is the market overall for those ups and downs, the entire ETF market?
I think we have the benefit of an ETF ecosystem that today is incredibly robust. ETFs have been around for 30 years. They've weathered multiple financial crises and various market cycles. And so the ETF ecosystem itself, I think, is very well positioned to handle market volatility. That places us, I think, uniquely at a state where investors can worry less about the fact that their funds are trading on exchange and focus more on the fact that liquidity and increased tax efficiency allow them to be a bit more nimble as market environments continue to shift. And I think that's a huge bonus for financial advisors and RIAs.
Interesting, right? How is Capital Group working to challenge the perception of active ETFs in particular? And how does that filter into your own product development thinking?
Yeah, the perception of active ETFs is a really important topic to dig into because to date, most active ETFs have been incredibly niche. Investors that have used the ETF vehicle have often been really stuck with the passive core, and they have created a satellite allocation of incredibly niche, high octane or thematic exposures around that passive core to help drive differentiation in their investment results over time. Effectively, the financial advisor has become the active manager. With Capital Group's entrance into the ETF landscape, we have packaged active management in a vehicle and in a way that it can sit at the core of a client's portfolio. And when I think about the market volatility that we're experiencing, if you are an advisor that has a passive core and a satellite allocation around that core, you need to be putting a lot of thought into that satellite allocation and how you're making shifts there to benefit clients in this challenged market environment. By rethinking portfolio construction and placing that active management at the core of the portfolio, I think it provides an opportunity to spend more time with clients and less time on the investment management. And recently, we've done a Pathways to Growth survey of financial advisors. And what we found was that for every 1% of additional time spent in front of clients, it resulted in a 3% increase in AUM and revenue for the financial advisor. So giving them time back is incredibly important. And actively managed ETFs, I think, are helping to redefine the landscape of what it means to be an ETF and how an ETF can be used in a client portfolio.
No doubt in this kind of market environment, when you have volatility, clients want to speak to their advisors. So it makes sense. What about a blend really of actively managed and passively managed ETFs? Can you kind of tease that out a little bit as well?
As an organization, Capital Group is an actively managed fund shop. We believe in the power of active management, and we can believe that it can serve as really the core and the heart of a client portfolio. What we know is that many of our clients have long blended active and passive, and we believe that that can be an incredibly viable strategy as well. Most often, what we're seeing is a portion of the portfolio that's anchored in really low cost market cap weighted exposure, and then complemented with really high conviction, long term beneficial active strategies, so that the blend is giving their clients a composition that is incorporating market beta and also incorporating the benefits and the potential resilience that active can provide. So I think there's a space for both in a client portfolio for those that would like to maintain an allocation to passive management.
Although it sounds like the active ETFs might gain a stronger foothold going forward.
Well, I think undoubtedly the SEC ruling that came out in 2019 that changed the way that ETFs came to market really make it possible now for active management to be packaged in the ETF vehicle in a way that it was not before. So historically, we've seen a strong preference for passive management within ETFs because the regulatory environment favored passive management in the ETF structure. Specifically, it was very difficult to be a new entrant in this space. If you were trying to bring ETFs to market, the process was longer and a bit more arduous than it was for embedded issuers who were already in market. Second is many of the benefits that clients have come to know and expect from an ETF, namely tax efficiency, were really only possible if you were bringing an ETF to market in a passive structure. All of that changed in 2019, so we're now seeing increased opportunity to package active management in the ETF vehicle and deliver on the benefits of tax efficiency and liquidity in ways that we really hadn't seen before. And I think that's going to be a game changer for investors.
How receptive have advisors been to some of these changes?
Our advisor community has been incredibly receptive. I will say we launched ETFs not because we felt we wanted to. We launched ETFs because we were hearing routinely from our clients for a number of years that they really preferred this vehicle and they wanted an ability for the taxable portions of their clients' portfolios to allocate to the more tax efficient ETF structure. So we believe that our entrance in this market space was squarely in response to stated client demand. And as a result, I think that's driving the flows that we've seen into the products really since the inception. We've been in market 3 months and we've seen incredibly strong demand and incredibly strong flows. And I think it really is because our launch was anchored around stated client and investor demand.
And how do you see the landscape changing, let's say, both short-term and long-term?
Well, we're already seeing an immense number of active managers enter the landscape. And I think that over time, we're going to see increased entrants help redefine what it means to be an ETF. What I mean by that is move investors' mindset away from ETF equals passive to ETF equals a tax-efficient 1940 Act vehicle that can be appropriate in many applications in a client portfolio. So I think that's the trend that we're undoubtedly seeing. I also believe that we will, in the future, see an ETF landscape of issuers that looks far more similar to the diversity that you see in the mutual fund landscape versus the concentration we're seeing in the ETF landscape today. Again, because we have been limited mostly to passive management, there's very much been a first mover advantage and a winner take all mentality in the ETF landscape with regards to issuers until now. And I think as we see an opening up of that environment, we're going to continue to see a diversification. We'll see more larger players enter the marketplace, and Capital Group absolutely intends on being one of those participants and one of those issuers as we continue to grow this franchise over time.
We've talked about a lot of issues here in the last couple of minutes. What do you want advisors to take away from this conversation? What should they think about in terms of portfolio rebalancing and other portfolio issues?
Key takeaways for the environment we're seeing today. I think first I would say just remember that volatility is your friend, and you have a unique opportunity today to rethink your portfolio allocation and perhaps make some of those changes that you have been asking for and your clients have been demanding for some time, but you've been hamstrung by the market environment. As markets decline, there's an opportunity to rethink your portfolio. Second is just a friendly reminder that the asset allocation decisions you make, making sure that you're focusing your client portfolios for the long term and maintaining balance in those positions, those are the most important decisions that you can make for your clients to help achieve their investment results over the long run. So maintaining an eye on the long term is something that our investors are doing within our ETF strategies. And we really encourage all of our clients to do the same with their investor portfolios as they think about asset allocation. And then finally, remember that as you have increased choice today, particularly within ETFs, active management can serve as a really important buffer in times of market volatility. So as volatility is your friend and you're rethinking that portfolio composition with an eye toward the long term, bringing simplicity back to the core with active management in the ETF vehicle can be a really interesting choice as you look at the landscape we're facing today.
Well, that is all the time we have. I want to thank you so much for joining us.
Thank you, Rhonda.